Okay, let's look at today. Yesterday, I looked at ants. The title should be ants DT or day trade plus plus. So whenever you're looking at doing day trading, those of you who are interested, and if you are not really a day trader, I don't think this meeting is for you. You should not waste your time here. I'm going to talk about day trading. Not everybody is doing day trading, and it will lead to a lot of confusion. Okay, so if you are a day trader, and if you can do an anticipation, then it's a very good way to start your day. It's a very good way to make a lot of money. So let's say yesterday or Friday is an example of that. What you had was you had I think Intel, right? And Intel was gapping down, right? Intel was gapping down, right? And if you see from the low uh, to high, it made almost a $3 move, right? This was an anticipation, and you could anticipate that this is likely to happen. It was a very high probability kind of an event. Why? Because whenever there is a gap down, what happens is it tends to fade in the direction target here. On this particular day, if you see from 101.24 to a high of 105.50, that's a $400, and you knew in the morning that this is likely to happen. Okay, so anticipation in day trading can help you really find very good opportunities and not really wait for market to scan for it or things like that, because you know what is going to be gapping down, and especially when they're like larger stocks, they're gapping down, then you know there is going to be opportunity there, or there is that's the anticipation which you need to know, because if you can do that, then you will find very easy way to make money, because whenever things are gapping up or gapping down, there is a high likelihood that you are going to get some sort of a reversal. And this is especially true in the case of index component, where Intel is a index component, or target is an index component. So if you see and study these stocks, whenever they gap down, the gap basically recovers. So here gap down and it recovered for that day. And if you look at it here again, 175, and the high was 182.76. As a day trader, that's a lot of money, right? And you're talking about $6 range here. So whenever there is a gap down, okay, you have a substantial advantage as a anticipating that it is likely to reverse. So that's one of the core things which is used by many traders, which is like gap down, and you fade the gap, in the sense you buy a gap down kind of a thing. Same way, not everything the same logic applies not to every gap, but to many gaps on a gap up sides. But like this trade works more better on a gap down basis than on a gap up. But minor gaps, gaps which are less than 5%, or like typically 3, 4, 2%, many times there will be gaps and they'll fade, you see here, there was a gap up and then it faded, right? And you'll find that on index stocks very early. So that's a age, and it's a big age basically, because if you know that, you look, and this is what is going to happen, then you know what to do. Means you're ready, or you're you enter it as either an OPG, or you enter. Many times what people do is it sometimes works, it sometimes doesn't work. Is if there is a gap down, and so it is gapping down to 54, so they will put a buy order at 53.50, okay, or something lower than the gap down kind of a thing. But it doesn't always work. It's many times you'll see that just 2 or 3 minutes before the open, the gap starts filling up, or many time during the because a lot of time nowadays a lot of trading happens in the pre-market. So but that's a trade which is like an anticipation trade, right? uh, Would you buy as OPG? Yes. If you like, and if you do a proper sizing, yes, you can buy as an OPG. Very much like, and that's how means like that's the best entry. Obviously, you'll have to be willing to take some hit sometimes, like, and it might go down a bit, and then it will recover. Okay. In this case, it just recovered immediately, instantly. Sometimes it goes down a bit. Even in this case, it did go down a bit. Like you will see that it opened at 101.24 and it went down to 100.50. Okay, so a lot of people, they just like, and they put below the buy kind of a thing based on some percentage or some thing. But this is a very good methodology, and it's an anticipation, because you know, you look, and this is likely to happen. You have the list ready, you're not scanning, you're not doing anything, everything is there. Okay. uh, so gap down for index components tends to recover. Okay. So, and this, you can study this, like, don't get to do it things like just buy because I say. Always study index component are things which are basically Nasdaq 100, S&P, Dow Jones, all of them. And liquidity is true. I would like probably make the liquidity here is 500,000. So I'm looking for like a more liquid. It doesn't work on less liquid. It might work, but like it's better to do it on a more liquid stocks, especially when you're doing day trading. It's always better to do more liquid stocks. Okay. So that's a thing which is like a very common phenomena which happens, especially during the bull market. Like once if you're in a bearish market, things might not work that way, but when you're in a bull market, anytime there is a gap down, okay, there is a high probability that it will be reversing to the upside. Okay, and this is very well known. This is something which like people exclusively trade only this in the morning. So it's not something which is a secret kind of a thing. How well you can do it in terms of like the tactical thing is really the important part of it, basically. Okay. Same way, if you have a gap up, but it is a minor gap up, means like it is gapping up 2% or 3% or something, more or likely that you are going to get a reversal on it. Okay, because the back-to-back gaps are always or like the unless there is a earnings or it's a breakaway gap kind of a thing, most of the time you're going to get the gap faded. But the trade really works best on the downside, in the sense gap downs work better than gap up. Okay. So stop is still somewhere between 40 cents to 50 cents. When would you buy as OPG, or would scan for gaps down in the morning? There is that guy, I don't know, he's got nothing else to do, so he did a video, okay, on gaps, and it shows how to scan for the gaps. Somewhere there is trading gaps. It's a 1 hour 15 minutes video. Okay, so there is a scan for trading gaps, but most of the gaps, like in order to scan, like it's not like when the market opens you scan, then you're too late. Okay, the whole point of anticipation is to know this before the market opens, and for that you'll need a scanner which scans for pre-market, because if a stock is going to gapping down, in pre-market it is gapping down. If you're going to be running the scan and then buying, you know where to send your money. Okay. Market orders are best time is sometimes when I set limit orders. Yes, most of the time the people who do it, like they just do a market order, basically. That's the best way, or OPG. Stop is somewhere between 40 cents to 52. It doesn't. It will have to be based on price of the stock. If you are trading, say, a target or something, and it's priced at $100, it is not going to work with a 40 cent 50 cent stops. Okay, and a lot of time it is like your ability to carry the hit for some time, for fraction of sometimes it is 5-6 minutes, but invariably they turn. So it might be like, and it starts and going negative for some time, and then like, and it will turn. So it typically, this is typically a very nice trade. See here, you get a gap down, and from the gap down it recovers. Sometimes it goes down a little bit, like from a gap down. See, this was again a gap down or something like that, and it recovers. So it's very common. It's a technique which you can like in a perfect. Uh, TI30 is good way to find. By the time you find in TI30 a gap down, you are going to be way late. Don't even try that. Like, and send me all your money. Okay, I'll keep it. Uh, it has to be done pre-market. Okay, this is not like in a game which can be done. So obviously, some of you are not day traders by the time of questions which you're asking. So don't try this if you are not a day trader. Okay, it's try and like figure out pre-market how to find out which stock is going to gap down. Okay. The new T2000 has PM data. Not sure how well it works. I have no idea. It has not worked for me basically. Okay. Uh, I have no idea because it just doesn't work for me, and like every time it doesn't work, they send 2-3 people to look at it, and then they can't replicate the problem. So let them fix it, then I'll look at it. TI30 shows gap down pre-market. Yes, that is, you are calling trade ideas TI30. TI30 is a specific strategy, which is like a stock which is in the first 30 minutes, which is different. So that's why the confusion. But like, it's a, you will have to run a pre-market scan basically for this. Okay, so that's what it is. Can you scan pre-market in new version? I have no idea. Okay. So that's like in a very profitable kind of a thing. It's like the stock starts recovering, and then once it recovers, you can like look at getting out of it at some stage. And most of the time, it makes a lot of sense to hold on to the stock for as long as it keeps on going in this kind of trade. So it doesn't really become just like in a few minutes kind of a trade because it gaps down, and from there it recovers, and many times it spends the rest of the day going up and closing near the high also. So it's not as if like you need to, but sometimes it can fade later also, but most of the time it gaps down, and then from there it recovers kind of a thing. Okay, very common. Especially in a bull market, you will see that it is very, very common kind of a thing. So that's one anticipation kind of an edge, okay, which you have in a day trading, which is buy a gap down. Okay, again it has to be a major gap down, not like a small gap down of 1% or 2%. No, if it is big enough gap, 5% plus on an index, that's a big gap, right? And indexes are like typically don't have that many gap downs kind of a thing, but when they have they are profitable. So it's very profitable, and it's anticipation. Okay, so that's one. Okay, second is whenever you have a big earning move. Okay, now obviously the earnings is an anticipation trade. Something like Snap is a clear anticipation trade kind of a thing, where before the market opens itself that this stock is going to make a big move for the day. So you just go and buy them OPG and like at some stage sell basically. But that's clear, absolutely clear anticipation kind of a setup, where big earnings or some catalyst plus catalyst. It can be some kind of a catalyst which is a new product or something, or 3+ analyst upgrade. Okay, upgrades, not upgrades, like in a price increase, basically price target increase. So these are like another set of this thing. And the whole beauty of these things is that every day there are gap downs. Every day you have some stock or the other having this. So it's not like it's, and all this is pre-market work. So you can do all this work pre-market. You don't need to be like scanning for it and things like that. Yeah, you can scan for pre-market gappers in any program. Did you find the trading works based on non-earnings gap down or not really? Fading. I'm not talking about fading here. I'm talking about buying a gap up on this day. Okay, so you try and understand. Okay, look, I'm talking about buying a gap up. Okay, so this is again another form of anticipation where you are going to be anticipating the stock is going to make a big move for the day. Sometimes it makes 30, 40, 50, 60, 70, 100, 300% move on the day of the earning itself. And that is also your after your entry as OPG entry. Still it keeps going up 30, 40, 50, 70, sometimes like in a rare cases even more. But in biotech it is more likely that it's going to make a crazy move. Okay, so this is another anticipation which is for day traders. The next good anticipation trade is next day after earning. Okay. And in that case, it is not necessarily earnings is big earnings or there is something, but like say for whatever reason, okay, I don't know why, but Las Vegas Sand on earnings had this big move gap, right? 490, 12% gap. Okay, so I was anticipating that it's going to fade next day, and exactly that's what happened. Right from the word go morning, it opened and then it kept going straight down. Okay, so second day where the after the earnings, and this is not the only example, CMG, what happened here? It is like, and it went up. Next day what happened? Right from the word go, the whole thing just kept going down, right? And it's most of the day it went to go down basically here from the open, and it went down, and it went down $44. Okay, and this was like completely anticipated, could be anticipated because this was like 12% move, and obviously if you're looking at the earnings and all, yeah, the earnings was there, but it wasn't like a really earth-shattering earnings. And at the end of the day, what the Chipotle Mexican Grill does, it just like put some stuff between a roll, right? Or gives you a bowl and in that put stuff. So the next day fade, okay, is like a very, very profitable, especially in this market. You'll see that look, and these stocks are trading like gapping up big or doing big thing, and next day, right from the morning, they start fading. Okay, so that's like an easy money if you can anticipate this. I told you in meeting on Friday saying, look, this Las Vegas Sand is going to be one of the things which is going to fade, right? And that's, you have to know, then look at things which are gapped up today on Friday and see which one of them on Monday are likely to fade. And then again, in all these things, because it is anticipation, your ability to enter these trades is important. If you're going to be scanning for these and then after that entering, no, many of these trades can actually be also swing trades, in the sense you could have entered something like Las Vegas Sand on this day itself near the end of the day, because it was very clear that it is going to fade. Okay, so that's like that's what it is. Okay. Does gap down with 3 plus analyst have the same success as gap up 3 plus? Seldom do you find that look at an analyst are aggressive in cutting targets. Okay, and even if an analyst cuts a target, okay, the stock is likely to revert, and its most important thing is in that is to understand why that is likely to happen. There is a reason why that happens, and if you know the reason, then you will know why it works and what is the reason. Yeah, this bunch of people lowered the target on Intel, but that was not really like relevant, because there is a reason why these things work this way, is because the market has a permanent up tendency. Okay, so because it has a very high up tendency, and there is always like, and also like people who sold or they want to sell, they sell, or their orders like get executed, and then there are no more sellers, because in this market structurally there are always more buyers than seller. In fact, the number of buyers to seller ratio is like probably 1 million to 1 kind of a ratio. Okay, so as a result of that, what is going to happen is, because, and that you have to understand structurally. Okay, look, and mutual funds are buyers. Okay, they are not sellers most of the time, unless a story soars on them, they don't sell. Okay, they keep buying. Okay, pension funds, they just keep buying. Okay, large hedge funds, the one which are like really large. Okay, most of the time they buy counter trade. So if something is gapping down, they want to actually buy rather than sell, because they also studied this, right? And who is the one who is selling? Who are the sellers? Short sellers. Short sellers are like what percentage of the market is short selling? Yeah, mom and pop and retail traders and those who are stop or things like that, or who bought it at the wrong time, or those are the traders. They are like they are like that 1% of the market is these people. Okay, their ability to move market is very low. These are all permanently buy. If you see, most of the mutual funds didn't sell anything during the entire market correction, right? And so that's how they operate. So there are permanently more buyers than sellers. So as a result, the trade works better on the downside than on the upside most of the time. Okay, but anytime you have a trade, okay, which is like this, the next day there is still a possible trade sometimes. Okay, many times there is a trade next day also, which is like in the next day again. The stock offers you an opportunity because it recovers, but doesn't mean that it is going to be going to keep going up. Sometimes it keeps going up, but many times next day it fades that gap up which had happened. So there are many opportunities like this. So gaps is where you have an age basically next day after earnings. So always look for like something which is having a gap up. I don't know what happened, just went blank. Really, 10:30 on Sunday, and it is blank. Okay, but anyway, we can look at this like this also. So it's not given that tomorrow this stock is going to keep on following up, and if you want to do an anticipation trade, more likely that it is going to go down tomorrow. Okay, so that's 54 is the opening price. This is the stop or this is the price at which somebody puts an order basically to buy that. If it is gapping down and the indication is it's gapping down to 54, then some of the traders they put an order below that. But best is to like buy it and be willing to take some hit. That's how the trade works best basically. Okay, which is not for everybody. Okay, that's like the trade can go against you 4-5% and then it recovers and it goes up also. So next day after earnings is a good strategy, which is basically look for this kind of weird the kind of things which happen, which is like Chipotle Mexican Grill. So here Chipotle Mexican Grill gapped up, next day $44 by fading that gap up. You could, and in fact on a second day also it was gapping up, so that was also even better because of that. So that's the trade which is there. Okay, what else is there on this one? The other thing which is an anticipation as far as day trade is concerned, okay, is this major stocks. Whenever you have major stocks like these big stocks, like say the one which are really the big one in the index going up currently, okay, say Tesla, okay, not regeneration, it's not really very liquid, but like Tesla, Netflix, Amazon, these are stocks, especially the 4-5, Nvidia. Okay, if you look at these stocks, and let's look at them here, so that like so you have Amazon, okay, or Tesla for that matter, okay, or you have NVIDIA. Okay. Every time they come down, okay, what is likely to happen? They tend to bounce back, right? And so if today is a negative day, then what is the likelihood that next day will be positive day? Very high, right? Especially on the negative side, like, and if you study NVIDIA, or if you study things like even AMD for that matter, you will see that persistently when it is negative, next day it tends to be positive. Sometimes, like, it doesn't work that way, but like most of the time, whenever it is negative, okay, next day it is positive. Whenever it is negative, next day it is positive. Negative, it is positive. So there is a big edge there, right? Because we know that these stocks are doing this. So the moment there is a negative day, next day, like, you're just looking at buying them because they are going to make, for that day, we don't know what is going to happen after that, but for that day, next day, they're going to make you money. So that's free money, right? And it works only in stocks which are like uptrending. So that's why I sorted this list by YTD, which you can sort it by whichever YTD or MDT or whatever. But these are stocks which have like an uptrending things, more uptrending bars than downtrending bars, and as a result of that, they are going. They have this thing. And if you want to do more sophisticated way of doing this, you can do something like called a persistency kind of a thing, which is like, you're looking for how many days out of 252 days they are up. Okay, so in this particular case, Tesla, no, Paycom is the number one, or this Nemot mining, CME, MMC, ODFL. But for trading purpose, you'll have to do it at a lesser time frame. Like, and I would do it at, like, say something which is like this. So here you have, like, say a stock which is got high persistency score. That means like it has more positive days than negative days, right? And I would do this as for, say, something like 40 days. If I have to do this for day trading, but most of the time, all that I do is I just look at these big stocks and look at them. If they are negative, next day they are going to be positive, right? So you just like anticipate that, and at least you have a sure shot way of making money next day, right? Apple, negative day, next day positive. If it has little bit negative day, it's going to be positive. Okay, day before yesterday was negative, and on Friday it was positive. So it's a very simple way of finding, but you have to select the stock which has got persistency. So here, negative day is followed by positive day, negative day is followed by positive day. Most of the time on these kind of stocks here, because of the market dislocation. But if you just study Tesla, every time it had a negative day, more or less likely next day was a positive day. So that's like free money, or that's anticipation that next day how should I be trading this stock. And in this case, you're just going to be trading it as long, as a day trade basically, right? I don't know whether that will help, but let's see. Okay. So that's another thing which is like, and I told you about gap down. Okay, so gap down, fade, that's anticipation as far as day trade. And all these trades, try and understand why they are anticipation, because you know before the market open, right? Means the whole idea of anticipation is what? Is you anticipate something is likely to happen. Okay, gap up, fade, especially for minor gaps. Okay, earnings, that's positive earnings, and then you're playing in analyst target raises. Typically analyst raise target along with earnings, so they tend to be similar kind of events. I haven't seen analysts raising target on their own. Sometimes it can happen if a new product or something is there. Next day earnings. Fed. Okay, this is again, well in advance that this is likely to happen or this is a high probability event. Okay, and next is the index component with high momentum by weakness next day. So look, coming into coming into Friday, you don't have to go and desperately look at what is happening on the timeline, what is Vegas saying, what is this guy saying, what is it to find a trade. No, okay, look, Tesla was negative coming into this day. Okay, so here you have a trade which is like a Tesla, and it's $19.52 the way it makes moves. So you buy Tesla either based on lower time frame or just based on for a trade, right? And you don't know whether this is going to be continuation, right? And it's only for one day at least. That's a very high probability trade, and you'll see that whenever it had a negative day, most of the time it had positive days, and the negative day was followed by positive day, negative day was followed by positive day. So it's like an ATM machine once you understand what you can do with this. Okay, and that's like a momentum by week next day. That's a very good, nice way of finding a trade as an anticipation trade. And then in addition to this, there is an anticipation trade which I have shared many times, which is an anticipation on 5 minutes chart on stock up $3 plus in first 20 minutes on 300K plus volume. Okay. So those kind of stocks on an intraday basis, sometime during the day, will have anticipation setups, and then you can trade those anticipation setups. There's nothing to show here, so this session is really, I'm going to terminate it sooner than I was hoping, but that's a classic anticipation setup. Okay, so that's basically what happens, right? And any one of these anticipation methods for day trading, okay, all these methods for day trading, okay, none of these require expensive tools. They don't require you to do real-time scanning, do anything like that, or not to desperately follow somebody. What did this guy say? But I didn't get it. 53, 54. What did he say? 53. He says he's buying. I am trying to buy, and then you're chasing a move, and which is such a nonsensical way of making money. You just don't have any clue as to how to make money then day trading, if that is your core way of making money. Here is very simple way in which you can make money. Gap down, look for anything which is gapping down in the morning pre-market and look at that fading. Okay, a gap which is a minor gap to the upside, look at fading that. Again, you will know this pre-market. All this is known before the market open. Okay, this is known before the market open. 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 Next day morning fade. This is known even a day earlier. And you can do it even not as a day trade. You might do it between 3:58 and 4 o'clock also. Okay, but you can do it as a next day trade also to reduce your risk a little bit. And index component with high momentum by week next day. When do you know this? Yeah, end of the day, day earlier, right? And this is why these methods are called anticipation for day trade. So do you really need scanners and things like that for all these methods? No, right? You don't need to do, and you don't need to ask anybody. You just go and see some stock which is an uptrend, especially the index component, the big ones kind of a thing, and then you look for them for next day as a trade. So you see, like, can I say here, AIPL was negative, next day it is positive. On Thursday it was negative, and AIPL is positive. So here, as you can see, and especially when it is an uptrend, it is so clearly like, and you have such a big edge kind of a thing. Basically, like whenever there's a downtrend, you just look at this, and that's true for swing trade also, because the inherent, whoever did that video is a real genius, right? The one which is right, that's really genius, because like, and that's exactly true, right? And you just like, and see this thing, okay. And there are many variations of this, basically, in terms of many videos like this, and but that's the easiest way to make money in the market, which is basically every time you have uh, some sort of a dip in the market, And especially it works on stocks which are going up, not on stocks which are going down. Obviously, for that you need to find a stock which is going up. So if you see currently, say like an Tesla, okay, it's going up. So when it is going up, there is a down day. It is followed by an up day. Down day followed by an up day. Here, down days followed by up days. Down days followed by. So what is so difficult to understand, right? And this works best on like when stocks are trending, or like so you might look at it as a swing trading, but for a day trader this is also very good, because you see that look, and this stock is trending, there is a negative day, and negative day is followed by a positive day. So that's here again, like negative day is followed by positive day, negative day was followed by positive day, and it keeps on happening. That's the Ponzi scheme, which if you like participate, then you make money. If you don't, you don't. Okay. So that's another way of anticipating your buy the fucking the BTFD or index component buy week next day. Similar to this, okay. Again, the whole idea behind anticipation is to plan your trade, like anticipate something likely to happen, and then get into that trade basically based on that. So if something is going up crazily, okay, now what is the likely trade next on that particular thing, right? So if you have, supposing as of now, stock, this stock is going up a lot, okay, what do you think is likely trade on Monday for this stock? Yeah, it's like there is going to be a fade. Sometime a fade is likely to happen, either short squeeze, but then short squeeze will also fade at some stage. So same thing. And if you see, like whenever you have a strongly trending stock, what I told you always works. Like whenever there's a negative day, then you look at next day as positive day, possibly negative day, it did recover. So negative days will be followed by positive days if it is a strongly trending thing, and that's anticipation. Then you don't need to like really worry about like what news came out and what news broke at what time and things like that. You just can. So in order to find these kind of stocks, what you can do is you can scan for stocks which are like basically having a large range in the last 3 days or 5 days or yesterday, and which have high volume, and those are the stocks which are likely to make good candidate for day trading tomorrow. So how do you think I come out with this kind of list? And it's dynamic to the extent that I keep changing. Like I added W in this. Now, why did I add W in this? Or why did I add Chipotle Mexican Grill couple of days ago? Or why did I add Zoom to this couple of days ago? Is based on the same thing, okay. So that's the way you are like basically looking at it. That's what happens, okay. So this thing, if you understand, you can do day trading without like having any tension, because you know what is likely to make a big move next day, or what is likely to recover. It's not necessarily it is going to make a big move, but like when you have a stock with a big range like Tesla, for that matter, when you have Tesla, so you're talking about a range which is like big range, right? It's, how much did it go up yesterday? Like, and if you see, that's $19 move, and that $19 is on a end of the day kind of a thing. If you look at open to high, that's like a $20 move, right? And open to low, if you look at open to low 698 to high 730, that's like a $30 move, right? So that's range. So much money is there, okay. So you don't need TC2000 or anything for this. There are like you can make money without having any tools. You just like go to Finviz and look at something which is like up a bunch or down a bunch, and that's it. Like so what do you think this meso tomorrow is going to offer you opportunities, right? And either on upside or downside, but you don't even need to go into those kind of very volatile things where you have to be very absolutely clear about your execution, and you can end up losing money and all. In this kind of stocks like Tesla and all, they are relatively like, and they, you know, with certain amount of confidence that down days, if they start positive, it is going to end positive. So could you buy on the down day? Yes, you can buy on the down day at 358, kind of a thing. It's again the same thing, right? And basically uh, works based on stocks with high scores of persistency, basically. So you might want to do some sort of a persistency kind of a thing for this. And obviously it's not working now. Even the universe list is blank, so you can't do anything on this. But say something like this, okay, which is a 20-day persistency, and if it is high, then if you get a negative day, then or 40 days, so you just make this 40 days. uh, what you're looking at is the stock. What does this find out in last 20 days? How many times the stock ended up positive? So if supposing your score is 20 here, what it means is 20 days in a row the stock was positive. If you and I had say 16 score, what does it mean? It means out of 20 days, 16 days it has it was up, right? The stock with the highest persistency currently in the overall universe, I think, of stock is Paycom. Okay, I think it had very high persistency earlier. Now it has gone down, but it was one of the stocks with the high persistency over a long period of time, basically before the correction. Now it may not be the worst one, but it was one of those stocks which had up days, more up days than down days, kind of a thing. I think I don't remember now which stock was there because there's no way to find out. Okay. Uh, Yeah, that's the biggest curse which people have, which is the over intellectual I don't know whether that spelling is right, but that is what overthinking kind of a thing, or I get things where I see some of the things which come in 22 pages of newsletter talking about bond and this relationship and that relationship, but what is the trade there? Really means I what are means these are people who will be very good to have a conversation within a party or things like that, they can impress somebody, but uh, in order to make money, how much thinking is required? You see Zoom, you buy Zoom and you sell Zoom because it gaps up next day, and you make 100,000. How difficult is that? There is no brain required, right? And why buy? Because it's breaking out. And then why sell? Because the rule says that if a stock makes a big move, is gapping up, you basically take the profit, right? And that's it. But the amount of emails which I got asking oh, why, what was your rule, what was your stop, what is, means really see the exit rules which I have, the exit guidelines. So don't they say that if you get big profit in a short period of time, then you just basically get out, kind of a thing, right? uh, just because I said or somebody said that it is going to 200 and you just sat there and I had some stop which is basically not suitable for a swing kind of a thing, and now you're asking what should I do? I didn't sell and now it's below my entry price. So yeah, obviously just learn how to do swing trading rather than in a position trading, right? So but that's what it is. The and unfortunately because people need rationalization, right? You need some rationalization. If I tell you, look, this is why even in advertising also, if I tell you, look at it, buy this soap, okay, uh, you're not going to buy it just because somebody says buy this thing, or but if you say buy this soap because, okay, say for worst example kind of a thing, Miley Cyrus uses it and her screen is glowing because of that, then people go and buy because you're giving a rationalization, right? Or like that cream which is advertised by some actress which says I think Cindy Crawford advertises that thing on that late night shows and those what are those infomercials saying she went to France and some guy extracted something from melon and put it in her skin, and then like that's a rationalization, and then you buy. But that's same thing about stock. Trying to find rational for like an actions of stocks rather than understanding, okay, look, they just keep going up. Is and without asking questions is easier way to make money, but then it doesn't give you mental satisfaction probably, right? Yeah. So that's how you can like kind of basically do the anticipation on day trade basis. And if you take anticipation as your basic uh, way of doing day trading, this has to be philosophically, you have to like get out of reactive kind of thing. Reactive is you scan for things and then you're like basically based on the scan you're looking at getting into it kind of a thing, versus you anticipate. Okay, if you start doing that anticipation kind of or it becomes part of you in terms of like primarily you train your brain to be anticipatory rather than reactive, then what will happen is you'll find many opportunities, and the everything which you know about that will be available basically. The problem with all these kind of things, you basically many times you feel like you just don't get unless somewhere there'll be a way to click out of this, but it will not be very apparent, right? So anyway, so if you look at like an say TVIX, okay, here on this day it was gapping up. So what was the trade here? So this is one of the tricks with Finviz. You go to weekly chart and then you go to daily chart. The chart looks different than if you just go straight, right? So here this was gapping up. What was the trade here? Short, right? So straight way. That's if you can anticipate this kind of trades, you will become very good in trade trading. You will not be like really behind the curve because you're anticipating. You know what is likely to happen, and as a result, you will have more money. Otherwise, like if you try and follow somebody, I am not means I know a lot of people are sell these services of like giving you day trading alert and things like that, but really I have not seen one day trader who can trade of somebody's alert and who's made big money. Okay, it just doesn't work that way. The speed at which things happens are too rapid for that. So easiest way to do this is to do this anticipation kind of a thing, so that you know like this stock is likely to go down or go up today, and then you position yourself or you go on a lower time frame, and once your hypothesis starts playing out, you enter that particular trade. Okay. If you enter a major stock like Tesla, Apple, on something like Tesla and Apple like you can get away with $3 stop kind of a thing. Tesla, I'm not sure. Sometimes it requires, but then again, the trick comes in terms of timing. Like if you see, I did enter Tesla yesterday during the afternoon session when we were having the afternoon meeting, and I saw that it was setting up nicely, and because I bought it at the right time, the stop could be very close, and then from my entry the stock went up $12 by the end of the day. So that was like $12,000 on 1,000 shares. So it's also entry, right? Always time your entry with range contraction. If you can time your entry with range contraction, then you're likely to get a closer stop. If you don't time your entry with range contraction, you'll need a larger stop. So if you can time it with a range contraction, it's very easy because it will like basically uh, allow you. So here if you see that Tesla and how does one go and make it 5 minutes? Okay, 5 minutes. Okay, so if you see on the 5 minute kind of a thing, where is it? So somewhere like why is it showing timings which are like so completely whacked off? I don't know. I don't use this software, so I have no idea. Okay, but somewhere like, and if you enter here, or if you enter when it is setting up like this, then your stop can be closed, because then like the stop can be very close kind of a thing. If you enter on a breakout kind of a bar, you'll need a larger stop. So you have to always look at entering on a doji kind of a thing. UTC, where is UTC? I never use this, so it's okay, here UTC. So this UTC Zurich, what is this? And what do I have to change there? To Mexico City, Honolulu, Los Angeles, Bogota, Mexico, New York. Okay, so so here you see like during the afternoon it was having I think something like some sort of a, sometimes like the bar look very different by the close of it, but like I think somewhere and then I entered and I didn't really like close the thing at all, and so from that bar to the end of the day it's up around $12, and that is how you make money. Or I would say that this was a very ideal entry point on this one, because it was a range contraction. So always if you want closer stop, if you are if you are doing day trading, swing trading, or position trading, whenever you enter on a range contraction kind of a bar, okay, uh, you're always going to have a close stop. And if you enter next day or on a breakout, then you're going to have a wider stop. So that's the thing. What percentage of these day trades get stopped out? You can get stopped out like even with 50% down, like you can still make money, because it's not a question of how many. At the net end of the day, you still end up positive. I bought Apple also yesterday as a day trade, and it went up very well. So see here, it is come back, but the things are not back. Only this thing has come back. So if you see Tesla here, okay, sometime during the meeting it was setting up nicely here, I think, and then I bought it, and then I continued to hold, and it went up $12 or something from my entry. So that's not a bad trade for not much of an effort kind of a thing. You cannot find like, and I see finding momentum on 5 minutes kind of a thing. By the time you find it, by the time you enter it, like you're going to lose money. Okay, so you want to try that. I'll keep your money safe, and you try that. Okay, it just doesn't work that way. Most of the time, when you get that kind of a thing and you enter, you are obviously late into the move, because you are basically chasing a move, then especially on a lower time frame kind of a thing. There are this bunch of these things which I have done basically, which is persistency kind of a thing, which is basically if you're looking for a 10-day persistency, the formula is same, you just keep changing the days. So this is count true train, this is like a 20, this is for a year, so this is year, okay, and that's for a 2 year. Okay. I was just experimenting with something, so I did that. I don't know what this is. Yeah, this is looking at how many 4% breakouts have been there in the last 10 days. So typically, like if there are a lot of breakouts in the last 10 days, then that's a very highly volatile stock, or that is stock which has a big potential for day trading, right? Because if it had higher number of 4% breakouts, and if it is priced also 30% plus, then the range will be high, right? So these are a bunch of things which I did. Yeah, it works, but like there is no list, right? And where is the universe here? So let me try and restart and see if it starts again somewhere. TC 2000. So obviously you get an idea basically, like because of TC 2000 problem, like this could not have been as crisp as I would have liked, but here are the ways in which you can make anticipation work as day trader. Gap down fade, gap fade, minor gap up, this is gap up fade, earnings, anything related to earnings, catalyst, analyst, 3 plus raise of a target, next day earnings fade. So you had an earnings today, so you had Chipotle Mexican Grill earnings on this day, and next day it fades, or Las Vegas Sand for that example, where it had an earnings here and it faded. Okay, that's a trade which is very good if it is like basically the, you had to also like in a little bit know that look at it, the earnings on these was not earth shattering, like Las Vegas Sand didn't had like an earth shattering earnings, but why did it gap up, nobody knows, but that's how market operates, right? So index component with high momentum, buy week next day. Okay, so this is like, and for that you need to look at index component. If you have index component, universe index supposing, and then you look at them on whatever MDT or whichever way you look at it, and you look at them, they have been going up a lot, then most likely what is going to happen is negative day will be followed by positive day. If there is a negative day, okay, here it is followed by a positive day of $28, okay, because it has high momentum. Okay, buying in gold stocks can be their own characters, like they don't necessarily trade the same way as other things. Tesla, negative day followed by positive day, and $45 positive day. Negative day yesterday, $26 followed by a positive day, $19. Okay, and you'll find that very common, especially in the stocks which are like index component. So that's a easy money kind of a thing. And then obviously anticipation on 3-minute chart, a 5-minute chart on a stock of $3 plus in first 20 minutes, 300 kilo plus volume. And why this works is basically what you're doing is you're looking at a stock which has extraordinary momentum. So like something like say a Shopify, for example, in the first 5 minutes, supposing if it is up a lot, then you're looking at buying it during the day on a lower time frame. So once it sets up like this is when you want to buy it, because that's a classical anticipation setup, right? And here probably that was a good one, this one also was good one, and coming out of that, like this next bar itself was $6 bar, and if you took it here, and this one was like $16. So that's on, it works only on stocks which are up $3 plus on the first 20 minutes or 30 minutes on 300 plus volume. Bunch of you people send me email saying, what do you think of this stock? Is it good? But if the stock is not up $3, it's not worth your time and effort to do that. I get it, you have a smaller account and you want to trade like in a $5 stock as a day trade. You're not going to go much with that kind of an approach. What is the list for universe index? Universe index is just basically S&P, Nasdaq 100, and Dow Jones 30, and liquidity here is 500,000 because you want more liquid stock, not less liquid. Okay. Okay. So 5 minutes, like any chart, like if you're looking for to make money, then you have to find stock which are up $3 plus, and then look for intraday kind of a setup. They have to be up, and then you're looking at exactly same intraday 0%, so and breakout after that, and it makes a move. That's the kind of thing which is classical anticipation, which I talked about many times. Okay. On day trade, most of the time you have to be like going with some sort of a target in mind, or like basically you have to know the characteristic of the stock. Obviously on a Tesla kind of thing, I'm not interested in making a 40 cents or 50 cents profit, because when I get into Tesla, I'm looking for $8-10 kind of a profit, or even for that matter Apple, I'm looking for at least $3-4 kind of a thing. But like something smaller might be not be the same thing. Whenever I got into TVX, I'm looking for like a big $10 plus kind of profit. Sometimes more, and because I know TVX so well, because I've been trading TVX for like almost 2-3 months now since it started going up, that I know, okay, when TVX starts going, it is like $14-15. So accordingly I play it with that kind of target in mind basically. Yeah, S&P has most of the NDX and all. Weak structure 5 minute time frame is also, yes, weak structure is also profitable. If you have weak structure, same logic is same. You go bearish combo, you need to have a stock which is down $3 plus. So here is a stock which is down $3 plus, and then it has weak structure, and then you short the weak structure because it was down 4 days. This thing, or here weak structure, bunch of weak structure on TVX yesterday. It always works that way, but like avoid stocks like Meili and all, which are not really superb in terms of, or Zoom was like in a really not the ideal kind of situation because it went down on the news kind of a thing, and that's it. Firm stop, there is no range bound stop or things like that. If I get into a position, I have a firm stop basically depending on the price of the stock. If it is a smaller stock like $30 kind of thing, 40 cents. If it is larger stock, $1. If it is Tesla, you cannot realistically trade unless you find a very good setup where you can like put a stop at $3 or something like that. Okay, so any more questions on this? Anticipate, have a list of stocks which tomorrow are going to make you money. And if you can do that, then you're way ahead of people who are like chasing some chat rooms or looking at the timeline and buying based on somebody says, oh, this is going up or this is going down. That's like that's not going to get you very far. And if you can do this, you'll find that you can make a lot of money. You don't even, many of you have no clue as to what is the possible kind of money one can make by doing this intraday kind of trading, and in terms of dollar amounts or in terms of this thing. Obviously, you need size for that also, but it's amazing amount of money which can be made if you know what you're doing. Okay, if you don't know, and if you're trying to chase somebody's alerts, or you're just going to be like scanning through the day and buying a stock once it has made a move, you don't make money. Okay, you make money if you can find stocks and wait and sit there and wait for this thing to happen and then buy this candle. Yes, and not wait for the candle to form. So this is a skill. Okay, this is a life skill for those who are interested. Once you develop, obviously you can like, as long as you can maintain focus and you don't lose focus during the day, there are ample opportunities basically. What is the risk averse size say for Tesla day trade? What does that mean? I don't know. I'm not sure what is the risk averse size. This is something which I'm working on currently, like this whole thing of persistency. So using it in multiple ways basically, but anything above like 16, I would say is like, even 15 is good because that's like 75% of the time the stock was up. But like what you'll find many times is those stocks really don't have much negative days. Rarely do they have negative days. Like eBay had that negative day and then it went up. It's many of them are on a run kind of a thing. So it's like that. It's little bit of work is required. I'm working on that work. If you do PY longer term, so you will see that on PY longer term you get these stocks which are like have very high persistency on a long. They tend to be REITs. Many of them will be REITs for obvious reason, or utilities. But once in a while, when you and if you do it over a period of time, like over this thing, see this ChemMed has high persistency, so it kept on going up most of the positive days, kind of a thing. LSCG, Paycom was number one, it had very high persistency, kind of a thing. So what it means is that it had more positive days than negative days. Nipot Mining is now having that kind of a thing. So it's a dynamic. It's not like a written in stone kind of a thing. It is depends. Like Kaki had like a very high persistency here. So the major has to be calculated on that's why I'm going for a lower and lower time frame, because when you do it on a longer time frame, by the time you figure out you're late, right? And what you need to find is a stock which is starting out with a high persistency. Means basically 20-day persistency is good, because then if that continues, then that might be good. So 20, 30 days, 40 days is good. I think something must be happening to this stock for it to have that kind of a persistency. Every day is positive, right? And I look at this stock, basically there was no negative day, right? And or there are 2 negative days in last 20 days or something like that. So that's, or Wise Market or Bristol Myers Squibb. So do we need subscription or invest index list? I don't think you need subscription, like, and it's part of, everybody has this. So unless you have a free software, you can't do anything if you have a free software. You need like some sort of a subscription. What is your PY formula? PY formula is basically persistency formula. It is basically a 1 year persistency. So it's looking for things. How many days out of 252 days this stock was had a positive day? So that's what it is counting. It is counting positive day basically, because C by C1 is greater than 1 means like the stock was up for that day. So out of 252 days, how many times it was? So here if you see, like, can I say on a 2 year time frame, you'll see that Paycom has the highest persistency. Now obviously it has gone down, but for whatever reason it had highest, or Viva system or ResMed or things like that, okay, or Eli Lilly for that matter. So that's it in terms of looking at things. I would say that the most important thing is, if you can do this, you will be able to make a lot more money, keep yourself sane, not like in a really chase after $800, $1,000 softwares, and basically be in control of your trading, and you can plan everything well in advance. Some of that can be done a day in early, like you can enter at 3:58 to 4 o'clock, and then you can magnify your returns. Can we talk about Tesla day to day? See, on a day, like Tesla was like here, like so you have a negative day. You had a negative day here, and that was followed by a positive day. You had a negative day here, and it was followed by a positive day. Okay, and when it went up a lot, you can see that, like when there is a negative day, it was followed by a positive day. Whenever there was negative 1 or 2 days, it was followed by positive. Obviously this was a run which was happening in Tesla, but here again, like negative day, positive day. So it works on some stocks. You have to select the stocks which are like basically big index component, negative day followed by positive day, negative day followed by positive day. So BTFD basically. Yeah, you buy the next day basically, or you are anticipating next day it is going to be up kind of a thing. So that's what you're looking for, and that's what you're anticipating, and then accordingly you enter that particular trade. Or sometimes like the reverse of that, say Chipotle Mexican Grill was positive, and then I was expecting it to fade that particular thing, and it did, and that was a big thing. Or for that matter, Las Vegas Sand here, this negative, because it was it's in a downtrend, so that's why. Most of the time I buy next day. I don't buy them at 3:58 to 4, or I would buy them on a lower time frame or short them on a lower time frame kind of a thing. So Tesla for that matter, I was looking at buying that, and I bought it on a lower time frame. So I didn't really buy it at the open kind of a thing. I waited, and when it had a good setup is when I bought it, like basically, and kept holding it because I think I had like a good feeling that it is going to end up near high. So $12. Apple also, like, and I bought like that basically. I was looking at this, and see the other, I missed out one thing. Okay, one thing here is really move before earnings. So in the case of Apple, I've been looking at it, like the earnings is on 4:30. Okay, that is like you got 2 or 3 days trading days, right? So the stock is going to move in the direction of that. So that's why I was like, I bought it here, and it's a profitable trade currently. So that's what it is. Does this not go up against your assumption of 4% setup? What is my assumption of 4% setup? There is no assumption of 4% setup. There is there are three distinct ways of looking at things. If you're doing position trading, okay, it's a completely different game, right? If you're doing swing trading, your mind works very differently, right? And if you're going to be doing day trading, your mind has to work completely differently, and some of it might be common, most of it is not necessarily common. Most of the time in day trading things work which you will not necessarily do in swing trading, so it's completely different thing, right? So there is no assumption which I have which is like differentiate between day trading and 4%. The 4% is a swing trading setup. That's like a swing trading setup. That's a setup where you're buying after the breakout, right? That's very different from day trading. In day trading, you're doing intraday. It's completely, it's like a day and night kind of a difference. Tesla and Apple, I'm still holding. Okay. I'm holding them. I'm holding some Home Depot. Okay, because it looked like a nice setup. I actually entered as a day trade first, but I thought it will have a follow through little bit, and I can always sell in the morning because gap up will happen, or some people will chase it because it looks like a nice setup now. So that's what. Okay, any more questions? I'll keep it open for questions. Otherwise, like my main part of the presentation or main part of my message is this: can you do your work of anticipation for next day? Again, look at it. If you can do this right, you can make a lot of money. Okay. Yeah, I mean, a lot of algos are doing that, and exactly that is what they are doing, right? And it's not as if there's some magic they have. They're also doing the persistency score and all that idea. I got it from somewhere. I was reading some article somewhere, and he talked about persistency, momentum, and quality of momentum, and then the persistency of momentum, and why they buy stocks with high persistency kind of a thing. They may not be the fastest moving, but they have high persistency. So I just read that, and then I said, okay, how do I do this in Telechart? And I started experimenting, and then it still is an experiment. When do you have why before the earnings? See, why 3-4 days before the earnings? See what is going to be like, and basically going into the earnings. Would you take that swing as HD? Yes, it can be a swing. That's a swing basically. It's a bit choppy. It's not really very linear kind of a thing. You see so many gaps and gap downs and gaps down. So makes me a little bit skeptical about taking it as a swing. But it may work. Okay. Okay, so that's it. And if you can do this, you will be amazed at what you can do once you are doing it differently, and when you are basically thinking differently and not playing the game which 10,000 other monkeys are playing.